So we want to delve a little bit into something we haven't talked very much about today. We've talked a lot about finance. We've talked a little bit about some of the social, cultural, economic determinants of the space, but we have not talked about some of the technologies, be that machine learning or blockchain or any of the other fancy things that are in the works now that could affect what a lot of you are doing or put you out of work, perhaps. We don't know yet. Let's see what our investors think. Let's talk with Jacques first. You are pretty early to a number of things. The internet itself, you're an early investor, and blockchain you spotted early. Give us a sense, again, this is not a tech conference. This is a conference where people want to make a difference. They want to invest for good, they want to have impact, and they want to measure it. They want to do it efficiently. They're not charitable types, they're tough-minded money people. So what role can you see technology, particularly some of the advanced stuff that you're involved with, venture-based and so on, that could actually affect their world?
Well, I think there are two elements to it. One is, as an investor, there's so much new technology that's coming out to actually invest in the next generation of companies. So we saw the first wave of companies like Amazon and Google get started. A lot of them built their business models on data collection, all the digital crumbs that we give to them in exchange for using their services. That's not such a good deal for the consumer, for the individual that's underserved. So we have a new wave of technology creation, including blockchain technology, including even artificial intelligence, which also has negative potential impact also. But that can create more equality in the world. For example, I'm sure most of you have heard of Bitcoin, right?
Sure.
Yes. Bitcoin was built on blockchain technology, and the creators wanted to create a banking system that bypassed banks by kind of getting rid of the intermediary process, lowering fees, allowing people to be able to transact across borders. That is a very kind of powerful technology that can be used for positive impact. We have portfolio companies in Africa, in India, and the Philippines, where there are massive populations of unbanked and underbanked. We have a lot of underbanked here in the US that now have access to services that were not efficient for the current institution.
Give a specific example.
So BitPesa in Africa. The founder who came from the banking world, from the impact world, saw blockchain technology in 2013 and said, well, we had M-Pesa in Kenya. What if we had an M-Pesa that's borderless, that we could allow people to directly transact?
M-Pesa obviously was the pioneer in mobile banking. I think most people in this room would have heard of.
Yeah, so the Bitcoin blockchain can actually do that. M-Pesa is run by Safaricom, which is a monopoly. Bitcoin is not run by anybody. It's all the transactions are verified by computers and code, which eliminates the need for all the costs in the system and one entity that can actually shut down the system, which happens a lot with Safaricom. So she built BitPesa, which has now expanded from Kenya to Nigeria to DRC, and also allows multinationals to pay their employees in Africa instantaneously with a 3% fee, whereas it can take up to 2 weeks and up to 20% in fees. So it's not just the individual, it's these large multinationals that are being able to free up capital that then can be reinvested either at the individual level or at the corporate level.
So that's an interesting example about a blockchain application. In that particular instance, though, I'm sure that there are regulators that are keeping a beady eye on this, as well as the monopolists that you talked about, who sometimes they're quite friendly with. There is regulatory capture in many countries and so on, as well as in countries like China. Even if the regulator is not captured, quite the opposite, the regulator captures everyone else. They are authoritarian in their tendencies and very much don't like distributed systems. So how do you deal with that challenge?
Sure. I mean, so an example is China banned cryptocurrency in 2017. When I go speak in China, I make sure I don't present on crypto. I present on blockchain technology, which the Chinese are spending actually billions of dollars, just like they did with AI. They're now spending billions of dollars around blockchain technology. But the hundreds of people in the audience all come up to me and say, well, what about crypto? And so people are still bypassing regulations because at the end of the day, this is an open system. You can get access through VPNs. There are ways of bypassing the formal internet. And what we're seeing now is pent-up demand for ownership of capital. I mean, if I earn something, I don't want it held captive or hostage or being told how to spend it. And I certainly don't want that for the most underserved people in the world. And so this has kind of unleashed all this kind of pent-up demand and imagination of people around the world. So one country can try to ban it, but I can tell you there are millions of Chinese across all social strata that own and trade crypto.
All right, so you put down a marker for a decentralized vision. Let's see what Xiao Chen thinks. What do you make, well, before you comment on her perspective, maybe the same question to you. When you look at the suite of technologies that are emerging and the potential for impact, and in particular, kind of the financial impact that people want to have through the way that they do business in this room, what do you see as most promising?
Yeah, and I see there are a couple of opportunities, and all the opportunity lies with the challenges which are not able to be addressed by the existing technologies. And number one is ambition. So when we just want to drive bigger ambition to bring or leverage more capital into the space, and we need to convince the investors the dollar put into that will come out with the dollar impact or even bigger impact than that dollar. But as of now, the technology put into that is not sufficient to just provide that convincing argument. So with blockchain technology plus IoT devices, and you can just collect data from the project level and then to host the data on the distributed network. Nobody can tamper it. And through smart contract, taking individuals or intermediaries out of the space, making each of the project much less costly, and also provide the results, monitor the process in a much more efficient and effective way. So in this, that's much more private investment will be happy to jump into this. And number two is...
Before you go to number two, that's a
yes.
very elegant vision you laid out. Every piece of the puzzle from an engineering point of view makes sense. Is it happening already? Do you know of any case studies or examples you can point to? Or are there some practical obstacles that have to be overcome?
Yeah, there are quite a number of examples. If we just look into the impact investing instruments, each of the instruments which we are familiar with now can be potentially disrupted and are disrupted by the existing technology. And to give you a few examples. And if, probably many of you have been in the carbon market for long. And if you are, familiar with the carbon market from the project origination to the validation, to the verification, to the certification, it takes more than 14 months, some even 24 months. And during this process, that's many validators, third-party verifiers take a large amount of the revenue as the cost to cover their service. And we have incubated a number of such blockchain platforms, such as DAO IPCI, such as Energy Blockchain Lab. And then they provided a solution which can just, number one, issue the green financial instrument on the platform so that the third-party validator verifier can just, back out from the system, and then the investor can really see the result from the platform themselves from one dashboard. And from some of the projects such as the peer-to-peer energy trading system, which can address a lot of renewable energy scale-up problems. And many of the largest renewable energy producers in the world are also the largest renewable energy curtail countries. Or in this, the reason is simple. The renewable energy is produced in this part of the world, the consumption happens in that part of the world, and then they cannot be connected. And so then they have to extend the grid. If the grid is not there, they cannot be just consumed. Then they'll be just wasted or curtailed. So with the peer-to-peer energy trading system, that you can really just produce the energy and then sell directly to the consumer, and then without any grid or any other the existing infrastructure. So there are many, and also from the investment fund side. And another project that two funds.
Let's hold off on that.
Yes,
We've given us a lot to think about, and I just want to particularly give a shout out to your idea about the peer-to-peer energy. My first book was called Power to the People, which is all about micropower, peer-to-peer energy, and so I'm very encouraged to see that the forecasts I made 15 years ago that have been wrong for that all this time, now technology is bringing to life the energy revolution that we've all deserved, of course.
Well, I think it's an energy. It's in every kind of sector in financial services. I mean, we remember Napster and all these attempts at peer-to-peer services, but the scalability, kind of the global internet connectivity, none of that infrastructure was really in place. And now that we have faster processing power, we have all these people that are online, we have these smarter devices.
Right.
A lot of what wasn't possible 10, 15, 20 years ago is now possible. And it's really kind of about backing the entrepreneurs that are thinking that way and want to use this technology for positive impact instead of all the negative impact.
You're a venture capitalist. You were telling me earlier about a very interesting company that you've invested in. I want to see if we can share this with the group. A lot of the concerns of people in this room include environmental and social, and the supply chain of products, of course, is undergoing a revolution. As we speak. This is something your invested firm is looking into, the diamond supply chain. Am I right? Can you tell us a little bit about that?
We invested in a company called Everledger in 2014. The founder comes from the diamond industry. She's based in London. They have offices in Australia, Seattle, New York. And she saw a lot of kind of pressures of the diamond industry was going through. One was they needed to keep conflict diamonds out of the market. And there was no real way to track them in an efficient, truly transparent, verifiable way. And she thought of using blockchain technology to track a diamond from the time it is mined all the way through retailer. The other issue that the industry has had is counterfeiting. GIA certificates are counterfeited. Diamonds are being used for money laundering. Insurance costs are going higher. So this is an industry that was traditionally opaque that all of a sudden had to create more transparency. And not necessarily with parties that wanted to trust each other, but wanted to be able to access this database. And so, I mean, and that's really what blockchain technology is. It's this distributed database that people can contribute to if they have the right kind of ownership to be able to do that, but you can't tamper with that information.
Right, it's immutable. Right.
It's immutable. And that is a key piece of it. It's the transparency, the immutability, the distributed nature of it. And so they, actually the GIA just partnered with them to issue GIA/Everledger certificates, and they have the largest retailers in China now selling these verified diamonds. And say, look, it hasn't been an overnight process, but more and more as insurance companies get on board, as different parts of the supply chain get on board, it's kind of inevitable that
so you have found
where things are moving.
Yeah, that's exactly
yes, go on.
as the attribution part of another challenge that impact investor is facing. That's how to attribute the cost with your investment dollars, and without being able to see that this is through an organic process. You cannot sell organic food with the premier price. And when you issue green bond, if you cannot attribute that your investment or the project is really just going through that what you claim, and then the investors in the no matter primary market or second market will not just buy in that. So from blockchain technology, investor can really just look into this and can attribute what type of intervention are put into this and what type of result are coming out of this. And you can make this direct connection, and which are really fundamentally crucial for the impact investment space. And another thing that you can see from the impact investment space, or the third, challenge is really about the business models. Many of the impact business models are really, very costly. And if it's costly, then nobody want to jump into this. And many of the costs, when you just look at it, is around the risk management related cost, around the trust related cost. And give you a few examples. If a person in a remote area and the bank or any financial service provider don't want to provide them service, it's because they taken a high risk. But if we generate digital blockchain-based digital identity for this person, and all his or her record, a transaction record, can just create a digital identity, support who she or he is, and then to support the fact that they are willing and able to pay back, then the willingness of providing service to them will increase dramatically. And also another example of the affordability is around the lending side. If we see that collateral-based lending is the dominating part of impact investment lending, and if we just use digital asset-backed lending to just any default happens, the digital asset can just be automatically go to the lenders, and that can solve a lot of cost-related problems, make the business model affordable.
So you've put forward a techno-utopian view of how these kinds of investments that you're involved with can solve a lot of the problems. I must say, our most knowledgeable technology editor at The Economist, we're planning our Innovation Summit, which is a different event that we do around the world. And for the program was sent around by the events team yesterday, and he wrote back, say, take blockchain off of there. There's nothing going on blockchain. It's a bunch of hooey from IBM and other people. There's nothing worth paying attention to. Take it off the program. So there is skepticism, in particular about business models and can you make money on it. And maybe there's probably overselling as well. Let's take a pulse of our audience, and I want to ask you for your questions after that. For the question that I put to our speakers, not are these technologies awesome, but rather, are there applications in impact investing? What our purpose of gathering today is. Hands up, how many of you believe that blockchain, for example, can have a significant positive impact in impact investing? Wow. And keep your hands up if you think it's true. How many of you think that one of the organizations you're involved with may get involved or is already involved with blockchain? Is it something relevant to what you're doing? Okay, so some of the hands went down, but still a good number stayed up. And so that's great. I
So
haven't.
you're going to have to revisit.
No,
with
no,
your
no.
editor.
I'll report back and say we're going to need to put clearly a new session on in our innovation summits. The other question we haven't talked yet about. I'll ask the question since we're polling at the moment. How many of you are now actively looking at or thinking, in your ecosystem of companies, machine learning and AI will play a role within the next 5 years in impact investing, not just generally in your life to put you out of work? Okay. And hands up, how many of you actually think that it might put you out of work? Because I personally am concerned. The Washington Post reportedly has a significant percentage of its stories written by, machine learning algorithms, and so.
So can I
Yes.
make the connection between
Please.
those two?
And then do get some questions together, please.
Yeah.
Yes.
So I think blockchain technology and what it can enable, and we talked a little bit about identity, self-sovereign identity. I've actually invested in 3 companies in this space. And if we could have a wallet that has all our credentials and allow other people to verify and feel comfortable with our credentials as we cross borders and as we get work done, it opens up our livelihoods in a way that is different than now. Right now, people go to one company, work there. Where the future of work is going to look very different. But how do we I think about India, when it's a young population, it's going to be the most populous country in the world soon. How do we get all that talent in the workforce? How do they actually be able to monetize their services and skills without necessarily going to college in the way everyone has in the past? So I think AI is scary in terms of what it's going to do, what it's going to displace. There's lots of new people that are going to be unemployed or underemployed. And if we have a system of credentialing, of verification, of being able to connect peer to peer, even for the future work, I think it's an important piece of the solution.
Well, you put your finger on something. If, in fact, one gives some credence to the idea that the AI revolution, overhyped though it is, will in fact destroy a significant number of current jobs, though it will create other new jobs which we can't even imagine yet, perhaps. And the impact in emerging markets where people in this room are concerned about, should some aspect of impact investing already be ready to support those people to transition to those new jobs? Is anyone in the room doing that, specifically thinking about AI, machine learning, how it will impact the future of work in your circles? We'd love to hear from you if you are, but or is that one of those unknown unknowns that Donald Rumsfeld talked about?
Yeah.
You don't quite know how to deal with it yet because we don't know the shape of the beast.
Yeah, the linkage between different emerging technologies is really very clear that we are entering into a distributed society where that everything will be done differently, meaning what? AI is the decision making. And if the wrong data go into AI and then wrong decision will come out, blockchain can really just make sure that the data come in will be authentic, cannot be tampered. So then they are linked together. So that's why, and when you just look at big data, and AI can just, from the data, whatever data come. So with big data, that you can have data sources from multiple. Big data plus blockchain plus AI, that we create a trusted environment for the future. And that is the new infrastructure that we have to look into as this group. And when you bring this point that whether we are in the technology utopia, but I think this is a very valid, very important point because blockchain is compare blockchain as internet. We are in the early 90s or late.
I say 95.
Yeah, and in this way that you understand where the technology is. And when people tell you about the potential, we are talking about future. And also when people complain that there are not many examples, there are quite a number of examples out there at the piloting stage, but they are not at the commercialization.
Actually, some of them are in production. I worked on the Netscape IPO in 1995. Yeah. I started my venture career in 99 out in Silicon Valley. And I've heard all of this before. And as someone, I started my own fund 5 years ago to invest at the intersection of blockchain, AI, and IoT. and around impact, around diversity and inclusion. And I would say, I want to see the impact investment community take the lead on this, because we certainly didn't do that the last time around. And we saw what happened.
Specifically,
I
what
want
would you like
to
to
see
see?
dollars going
You want money
into,
invested in
I want
your fund?
scale.
For you?
I mean,
or for someone?
sure, I'll take it, but I think just because I know how I'm distributing it, and
Right.
I care about the positive impact of this technology. There are lots of entrepreneurs, whether it's through me or directly. There's so many entrepreneurs who need the capital to scale, and we're not talking about these crypto ICOs that were able to raise $200, $300 million. There are companies that can scale, build technology at a fraction of that. And those are the companies in my portfolio, and they are making an impact. But it's going to require dollars and smart minds and thinking about the positive and holding the entrepreneurs to those metrics of positive impact.
Yeah,
All
and
right.
dollar is
hold
only
that.
one thing. Because
Okay, what else do you
another
need?
very important thing is that they should be allowed to pilot within the impact investing space. Because only with the right partner, because dollar is okay, important. But if they are not able to partner with
Learn
the
by doing,
traditional,
right, as it were.
But-
a lot of times the traditional sector don't want to work with the new technology.
Right.
If the impact investor just working with the traditional partner and then create this space where that the pilot commercialization can be linked together.
Sure.
And I think that will be very important for this
Okay,
sector.
so those are two specific things. Yes, a question here. Let's get a microphone here. And I see a hand in the back, a gentleman there. Let's try to have short questions and short answers. Is the microphone coming? It is. Just hold on 1 second, please. Right there. The lady here, could you put up your hand? And then we'll go to the back.
Hi, Diana Glassman. I just wanted to ask you a question about privacy. So I've seen a lot of these emerging businesses all over the place, all over the emerging world, and you ask some of them, they have no concept of privacy. They have no ability to give free, prior informed consent to the populations that
Great
they're
question.
serving.
Yes. Privacy.
Yeah, I mean, that's the excitement around, where I think the promise of this technology is. I mean, right now, if you look at Aadhaar in India and these government databases that are being formed, people, it's kind of like what we've done with Facebook and Google. We've given away our privacy in exchange for services.
Your point about Aadhaar is
So,
that it's been hacked, is that right?
Yeah, Aadhaar has been hacked multiple times. Blockchain technology can shield elements of a transaction and identity if it's implemented in the right way, which is why there are governments that don't want to see it implemented, because then they can't see all the data or control all the data. So I think the people who care about privacy should really care about this technology, and it's evolving. We're getting more and more privacy technology into blockchain protocols, but there's definitely going to be tension between which one wins.
Do you have a
out.
response on privacy?
Yeah, just to be quick, that this is actually a startup trend. That public ledger with a privacy protocol integrated into that is the future.
In this, let me take the moderator's prerogative to do a follow-up. Is it right to argue that Europe, with its regulatory approach, GDPR and whatever else is coming next, is in a way setting the tone for the world on privacy, even for startups in Asia and so on? Is that fair to say? Is that what you're saying?
Well, I'm seeing it, and I actually just invested in a company that is the first GDPR compliant blockchain technology, because up until now you couldn't, everything was kind of transparent on blockchains.
Right.
And now, we're working on technology that can shield what needs to be shielded to be compliant and forgotten, the right to be forgotten.
Well, great.
So that's all evolving.
So let's get the last question. Again, a short one, please.
Yes. So the algorithms
Who are
that
you?
Oh, my name is Sam Schatz. I'm with a company called Aero Farms. We build vertical farms all over the world, and we have one in Newark, about 10 miles from here. Okay. So the algorithms that are used to mine Bitcoin, they use a lot of energy. They use about 2.5 gigawatts a year, which is about what Ireland uses for powering the whole country. And I think that the implications for that for
So your question is
Bitcoin-
the energy consumption from Bitcoin?
Energy intensity, but not just for crypto, but for blockchain in general. What are the implications for that?
Sure, yes. What do you say to that?
Well, go on.
Yeah, there are two angles or direction. One is that from the consensus mechanism, that the most energy intensive one is the proof of work. And from blockchain...
that's what Bitcoin is.
Yeah, exactly. And so then now from the consensus mechanism and many more, much less energy intensive protocol is being designed. So that is one way. The other is that you also look at, from the energy efficiency in the Bitcoin mining side, there's a lot of work being done. And the World Economic Forum has a lot of reports around it. And you can see a lot of, the new trend around this industry. Yeah.
So, what do you say?
Yeah, I agree. I think it's a combination of new consensus mechanisms that are that don't require, the kind of processing power that Bitcoin may. But there's also faster chips. I used to work at Intel. Semiconductor companies are working on more efficient ways of processing. And I believe, there's a lot of attention being paid to this, and a lot of entrepreneurs who care. I mean, I'm looking at green mining companies. I'm looking at governments that are, kind of offering incentives to companies that are going to use renewables. And so the big thing was, all the mining happening in Mongolia and China, and that's really moving. I mean, we've seen a big movement.
So it's a moving picture.
Yeah, and we're in early stages, and I think that's why we need everyone. Right. Everyone's involved.
Our utopians are not to be swayed, you can see, but I think they've given us a nice dose of what the future might be like.